Good evening and welcome to the show. I am Edidiong Iwang. Well, a very busy market week ended on Friday with a briefing by the Securities and Exchange Commission and the annual meeting and conference of the Chartered Institute of Stockbrokers. But first, let's review the highlights of the trading week across stocks, unlisted securities and fixed income. Well, the rally in the domestic equities markets was sustained for a third consecutive week as investors' hunt for positive real return continued amidst depressed fixed income yields. The all-share index ended 0.5% higher week on week following 4 consecutive days of gains. Consequently, the month-to-date gain grew 2.4%, while the year-to-date loss shrank to 14.1%. On sectors, investors piled into heavyweight consumer goods and oil and gas stocks, pushing both counters up by 6% and 2.2% each. The insurance index also closed in the green, up 0.5%. On the flip side, profit taking across banking and industrial goods sectors, whose stocks and respective indices were the top gainers last week, led to underperformances in the indices by 0.9 and minus 2.2% each. A total turnover of 1.416 billion shares worth 17.249 billion naira in 20,303 deals were traded this week by investors on the floor of the exchange. Now let's check in with the NASD market as at the close on Friday. Unlisted securities total capitalization stood at 507.85 billion naira, lower than previous week's 513.12 billion naira, and that's a 1.03% decline in total value. The NASD Securities Index for the week decreased from 714.21 points to 706.88 points. Now, looking at the fixed income space, bond trading was tepid at FMDK Securities Exchange as market players reacted to the higher 11.61% October inflation figure. Consequently, average yield trimmed marginally by 4 basis points to settle at 12.2%. Now into the Treasury bills markets, where activities remained bullish in the just concluded week. The average yield across instruments was slightly lower by 66 basis points to 11.8%. The average yield on the Nigerian Treasury bills declined by 225 basis points to 8.6% as demand remained strong in the face of a shallow market for securities and regular OMO maturities. However, yields on the open market operation bills increased 9 basis points to 13.4%, reflecting weak demand for those instruments in the newly segmented market. And one of the big stories on Nigerian Market Street was the final Capital Market Committee meeting for 2019, hosted by the Securities and Exchange Commission on Thursday. On Friday, the head of the SEC, Mary Uduk, briefed the media on a wide range of issues in the capital markets as 2019 wrapped up in the next few weeks.
Following an amendment to Rule 61.2 of the SEC rules, the Commission has issued directives to facilitate effective compliance with the amendment on operations of nominee accounts by the capital market operators. We enjoin all CMOs to familiarize themselves and comply with these new rules. To provide capital formation and investments from savings, we also inform the market that the Honorable Minister of Finance, Budget and National Planning has approved the composition of a national working group on savings scheme. The inauguration of the group will be undertaken by the Honorable Minister in the near future. In terms of investor education efforts, you are aware of the initiative towards including capital market studies in the curricula of basic and senior secondary schools. Having infused the capital market content into this curriculum, the next phase of our work is to develop the teacher's guides. We have equally constituted a steering committee for the university's curriculum. I am also delighted to inform you of the publication of the latest edition of the Nigerian Journal of Securities Market. While we would ensure that hard copies are made available to you, soft copies of this edition, as well as previous ones, would be made available on the Commission's website. At yesterday's meeting, the various technical committee provided updates on the activities and I would like to provide you with some of the highlights. In the presentation made by the Commodities Trading Ecosystem, we were informed about the ongoing collaboration with the Standards Organization of Nigeria to review applicable standards, as well as the schedule of a capacity building session for personnel of the Federal Ministries of Finance, Budget and Planning, Trade and Investment, and Agriculture. The committee is also having engagements with the relevant corporate and state governments to secure their buy-in on current initiatives in the ecosystem. Going forward, the committee is proposing to meet with the Nigerian Sovereign Investment Authority on the status of the Nigerian Commodities Exchange and work with the Nigerian incentive-based risk-sharing system for agricultural lending to develop some agricultural-based financial instruments. The Multiple Subscription Committee presented the status of its ongoing engagement with the Central Bank of Nigeria and Committee of Heads of Banking Operation to display multiple account regularization banners in the banking halls all over the country. The committee also reported that CMOs have commenced the filing of reports on regularized accounts with the Commission on a quarterly basis. Given the relevance of this exercise and the need to create more awareness, the committee requested for an extension of the deadline of multiple accounts regularization. The presentation of the e-dividend committee showed that the number of shareholders enrolled on the e-dividend platform has increased to 2.8 million at the end of the third quarter of 2019. Further updates were given concerning the ongoing efforts of integrating the direct cash settlement and the e-dividend mandate forms, as well as the engagement with the CBN on the inclusion of e-mandate charges among allowable bank charges. Also, the Non-Interest Finance Committee presented the importance of granting the PFS the permission to invest a given percentage of a willing contributor's retirement savings account in non-interest capital market products. Updates were equally given on the progress made in the collaboration with the Debt Management Office to develop a short-term non-interest instrument. The meeting received further updates from the presentation of the report of the Market Liquidity Technical Committee, as well as the final report of the Blockchain and Virtual Assets Committee. I would like to inform you that we had extensive discussions on these technical committees' presentations, and comments were also received on the presentations of the self-regulatory organizations and the observer groups. The following are some of the resolutions reached at the meeting. Registrars are to discontinue the practice of requesting for confirmation of bank signature during e-dividend process. CMOs are to display awareness campaign banners of e-dividends at their offices and venue of annual general meetings. Capital market operators should also work with the Commission to share awareness information on their social media platforms. Set to review the request from the Association of Stockbroking Houses of Nigeria for extension of time for compliance on the transfer of complete investor data among operators, such as brokers, registrars, and CSCS. Upon completion, the position of the Commission will be communicated to the relevant parties. The Commission is to engage the National Pension Commission on modalities which would permit pension fund administrators to participate in securities lending. The Commission is also to develop rules and regulations on warehouse receipts within the current legal framework.
Well, at the end of the briefing by the Acting Director General of the SEC, the Commission's divisional head in charge of economic research and policy management, Afolabi Olowo-Okere, clarifies the issue of market liquidity and its importance for asset price discovery and effective transactions. Olowo-Okere also explains how the Commission is using e-dividends and regularizing multiple subscriptions to address market liquidity challenges.
Liquidity is very important. I mean, for any asset prices discovery and for you to have transactions that will be for effectiveness, you must have liquidity. One of the problems we currently have is lack of liquidity. And that's why the Commission is trying to engage it from different angles. One of the angles is e-dividend, the other one is multiple subscription. But we also understand that people must have money to be able to trade. So in most of the CMC, even before now, we've identified that issue. People have complained about lack of credit facility, especially from banks to brokers, for them to be able to trade. And then there are many aspects of looking at that. If you must have margin loan, are banks willing to give you the loan? What are the regulations around the loan? And what are even the marginable security? So even before the CMC, we had a committee that was supposed to look at that issue. And that came from the last CMC. And then we had feedback at the CMC. The issues are two, largely. One is that you don't have banking stocks among the marginable securities. So even when you want to do margin loan, everybody is trying to say that banking stocks appear to be the most liquid stocks. And if you cannot do margin trade on banks, even when somebody gives me money, am I going to use the money for less liquid stocks? So I may not want to do that. So a major consideration is to look at the existing framework, because we have this framework after the crisis, to say what can we do on this framework to ensure that banking stocks are coming back on the framework. And we are engaging with central bank on that. So not only the central bank, we also engage with the market. There was a committee that engaged with the market to see what are the problems for them not engaging in margin loan. And the recommendation always, let's talk to the central bank, let's look at it together, because we currently have a framework that we didn't have before that we think is robust enough. Then we can look at the framework again and see if there are things that are there that we think cannot address our fears, then we'll look for what are the safety tabs to be put there so that we can address this issue. So at the CMC, we spoke about it, that we need to do margin lending. We also spoke about security lending, because that will also assist. I mean, you have margin loan, people give, because you also have security lending for those that are sitting on assets. Then people, the two can work from the demand and the supply side, then you can have a more liquid and balanced market.
Okay. At the SEC, what is the conversation around the situation that the market is experiencing right now? Equities, debts together, in terms of how the CBN has now shut out some players from the debt side of the market, and they are now looking the way of equities. But they are concerned about the depth of the market, which is not strong enough to accommodate the 9-point-something trillion naira pension assets that we have in this country, because again, it could lead to some kind of capital flights by the time existing funds are diluted, with what foreign investors bring on board.
Yes, it's important for us to put this in context. Sometimes prices of assets may be undervalued because the demand for them are lower. So that may show as if they cannot really absorb anything. But when they are correctly priced, then we are able to know what they can really absorb. I mean, I'm even talking about the existing assets. In addition to existing assets, one function of a stock market or of a regulated market is that when you have right pricing, it also encourages issuance of new instruments. If I'm sure that my security will be correctly priced and there will be effective demand for it, it's also kind of been an incentive for me to even issue securities. So if we have a relatively liquid market, efficient, transparent, and the price discovery is sound, then it can also encourage more issuances into the market. So we understand that the pension fund has over 9 trillion. But it's not all the money that will definitely go into equities. They will still be doing their fixed income. They can still do whether a bond or treasury bills and some other assets. But we see a lot of opportunities in the collective investment scheme aspect, especially in those areas that go into infrastructure funds. So they can move into infrastructure funds. Some of them can do things around private equity or PFM or money. And some of them can do more in equities. Just as I said, if people are so sure that the money is there, then you can also encourage other people to come into the market and issue security. The market as it is, the equity will not absorb all the money, but the money, a substantial part of it can still go into equity. There's this thing that nothing stops us from having 20% of pension fund in equities. Then people can know it's more liquid, then we can have a lot of domestic investors in our market.
In part 2, after the break, the annual meeting and conference of the Chartered Institute of Stockbrokers held 2 days ago has a lot more to chew than just stockbroking. Join us then. Well, thanks for staying with us. The Chief Executive Officer of the Nigerian Stock Exchange, Oscar Oyema, was one of the big economy and market personalities at the CIS Annual Conference held on Thursday. The head of the stock exchange tells his audience how the exchange is deploying education and technology to increase market participation, among other initiatives. Let's take a listen.
What is within the powers of investors, what is within the powers of policymakers, and what is within the powers of regulators. Those are the 5 lines of action. So for us, we've just recently had a market structure rejig to move what it takes to move the price of a stock to 100,000 and just stabilize 100,000 shares. Now, what that does for us is it reduces the volatility in the market and allows for a better risk-reward outcome when you think about the fact that highly priced stocks tend to lose significant amounts of market capitalization with little risk from market participants. Another thing we're doing is a lot of education, and also introducing technology to reach out to a lot more people. And I've told you about some of those platforms that we've recently launched. We've engaged with the companies. We really believe that for people to buy your shares as a company, they must have confidence in you. And so corporate governance, transparency, those types of things are very important to us, and we're engaging with our companies to make sure that they exhibit that. The next one is investors. It takes 2 sides to tango, right? So from an investor perspective, when you unpack it, you have domestic and foreign. The domestic, you have institutional, you have retail. The way to get this market going is the participation of institutionals. And then the retail will follow, and then the foreign investors will follow. And if you look at the institutional base in Nigeria, it's really PFAs. And PFAs are 5% in the market, the lowest on the continent. And so we're really engaging with PENCOM to understand those guidelines and to understand how we can get PFAs to allocate a lot more of the assets under management to the equity asset class. Not everything, because at the end of the day, we're market people, and we believe that you must have diversification across all asset classes, and that's really what gives you the returns. The next item is policy. There has to be a framework that supports capital raising in the capital markets. There has to be a framework that supports trading in the capital markets. And so engaging with policymakers to have the right balance of taxation, the right balance of incentives to make companies come to the market, the right balance of pricing to make it attractive for people to participate in the market. All of those things have to come from policy. The last line of action is regulation. We think that, and when I talk regulation, I'm not just talking SEC, I'm talking about all statutory regulators. We think that regulation needs to support an environment that enhances business. So you can have regulation that is intimidating, or you can have regulation that is supportive of the business environment and will drive capital creation. So we're engaging with SEC, our primary regulator. We're also engaging with other regulators like the Central Bank, PENCOM, NIACOM, and the rest of them.
Now, speaking to the broad economy at the Chartered Stockbrokers Conference is the chief consultant at B. Adedipe Associates, Dr. Biodun Adedipe. The renowned economist advises Nigeria to study how the United States and China use innovation to grow their economies while offering incentives that drive innovative ideas and products.
For us in Nigeria, we should begin to looking at the model of how the U.S., how China also has come up. We've seen that also happening in a couple of other countries, especially those that in the context of what we call the next. A number of them that have emerged the EMD is to largely reflect this pattern. The bulk of innovation that drives the economy and the growth is coming from the small, medium-scale enterprises. And so the challenge we have been posing to our government here is that sector indeed needs cost and also devised. Because, as we say, people respond to incentives. So, companies innovative, then you have to put incentives there. And this can come either in the form of tax breaks, forms of fiscal and maybe commercial policy incentives that will encourage such innovative tendencies. And there are quite so many. Yes, there was a reference to Kobo 360 earlier on. There are several others that in fact are not quote and unquote siren blowing, but that are doing new things within our space here in Nigeria. There's a young lady, a graduate of about 3 years or so, who is running a shared service transportation along this Lekki corridor from Aja to CMS. Of course, she started by hiring a taxi, later moved on to, a commuter bus. But subsequently, she attracted the attention of an NGO from Europe, and they donated some buses to her. And now the business is growing. Now, there's another one that does what she branded her company as Pillow Talk. Young lady. But of course, our product is going beyond Nigeria as we speak. There are many like that. So they are innovative entrepreneurs. But then the key issue is, do we have incentives enough that can make them scale up their enterprises? That is where the real challenge is. So we look more at the big names that can come to the market to list. We don't recognize that the big ones need the small ones in order for them to grow and create jobs, which is most important. The software company, one of the largest in the world, and has a customer retention of close to 98% over a period of time considered, I think, about 30 to 40 years. So, and the question simply is this. In that company, they reward innovation. So, in which case, if innovation will happen, every individual company has to have a reward system for it. In which case, for every idea that at the end of the day the company can take to the market, the company rewards that. And so people begin naturally to think and to come up with ideas that can not only bring disruption within, but also disruption that goes into the market. And that is what brings sustenance. Now, there's an idea that occurred to me while the last discussion was going on. And I asked myself, we have so many brokers within the Nigerian capital market here. And we're talking about innovation that necessarily requires technology as well. And we look at what has happened globally, especially in recent times. I will use a simple example. Amazon restructured and re-engineered its business first and foremost by building a digital platform.
Well, we hope you enjoyed the show today. From all of us here, we say thank you for watching and have a good weekend. I am Edidiong Iwang, and I'll see you soon.